It's a great pleasure to join you today, and thank you to MIA for hosting today's webinar, to Pauline Ho and the Integrated Reporting Steering Committee, and to Noor Farazal, Professor. Thank you very much for your profoundly important research and presentation today. Thank you to the many participants who are joining us on the call. So the findings that Prof. You've just outlined on market cap value and cost of capital and many other aspects of integrated reporting and its relevance to investors will ripple through the region and also around the world. I think it's a calling card to CFOs and finance teams around the world. And we will do all that we can as the integrated reporting team at the IFRS Foundation to ensure that our networks hear about this important and valuable work coming out of Malaysia today. We're living, aren't we, in a knowledge economy where brand, reputation, other intangible factors, let's leave aside sustainability for a second, we'll come on to that, but all of these other intangible factors are playing a much more significant role in how investors value companies, on how companies need to engage with their providers of capital, with their investors. And integrated reporting through the capitals model and its focus on broader value creation has really never been more important to connecting the value created by companies and their attractiveness to domestic and international capital, and also the attractiveness of human capital, of our people as well. And so I've been asked to talk about the continued relevance of integrated reporting. And I'd like to give you an international perspective, and I'd like to talk to you about how I believe integrated reporting has never been more relevant to investors as our capital markets continue to evolve and as policymakers continue to put increasing demands on our capital markets and on our businesses. How do we respond to that? And what is the response through a corporate reporting landscape to responding to those increased needs in the interests of investors? I'd like to begin by just kind of stepping back and doing something maybe that you weren't expecting and saying, well, what is an investor? Because we all have an idea, don't we, of what an investor is. And I think what I've learned over the last 10 or 12 years, or more than that, actually working in this area now with Simon and Pauline and others, is that investors are not a homogenous group. You've got traders who are very, very short term in our capital markets, in and out within seconds sometimes, their buy and sell decisions. You've got asset owners that are very long term and asset managers as well. And then you've got retail investors who often we forget about because we often think about institutional investors. But these are really the beneficiaries of all those decisions that are made in our capital markets. So I think when we talk about capital markets, we're not just talking about something that has relevance to, a rarefied few. We're talking about something that has real relevance to all of us, employees, our society, and the future prosperity of our society and our economy. We also think quite often when we talk about investors, we're thinking about equity investors, buying and selling shares, but actually the issuers of debt, they're also in our capital markets and often take as well through their commitments that they require of companies a longer term view. So let's not forget the debt market, the issuance of bonds and other forms of debt, and the importance of good communication to the providers of that debt. So some investors are very short term, others are very long term. And I think, if you think about the volume of trades in the capital markets, probably very, very high, very short term. But if you think about the volume of capital that exists in our capital market, much of that will be long-term capital. It will be capital that we're all saving up in our pension funds that hopefully will mean something for us later on in our lives. And we're talking here as well about sovereign wealth funds, strategic investment funds in our capital markets, government investment funds, pension funds, and as I say, the beneficiaries of those investments. So when we talk about investors, let's think about it in that broader context and not lose sight of the fact that there will be many, many parts of our capital markets that are looking for long-term information, looking over the horizon. And I think when we look at what the ISSB, and this slide here, what we're trying to achieve with our standards, it's providing that decision useful information to investors. We've got very used to it, corporate reporting being communicated to investors that focus on hindsight, backward looking financial information, and that's coupled with oversight, lots of regulatory and compliance information in our corporate reporting. Just look at the average annual report. Much of it is compliance based even today. What we're trying to bring with integrated reporting, and those concepts have been applied within IFRS S1 and IFRS S2, are two new forms of sight, of lines of sight, and they are insight. What is the governance process of your business? How is your board thinking about capital allocation? And how are you communicating that to your investors? And foresight, what is over the horizon? And thinking about the disclosure horizon over the short, medium, and long term, which is integral to integrated reporting, that form of communication embedded within the integrated reporting framework, we found, as Professor articulated so powerfully in her presentation, builds confidence and trust. It builds confidence and trust in our capital markets by investors, but also with other stakeholders as well. You know, we're talking about investor communication today, but a business, as Professor Mervyn King, the originator of integrated reporting, said many years ago, you know, a business is not an island. It operates in an ecosystem with society as well. So I think integrated reporting in the context of the ISSB disclosures sends the signal that your company is focused on building long-term value. And it also demonstrates that the governance of the organization, the top management, the board, is on top of the risks that will become financial risks in the future. And that addresses something that the Financial Stability Board has called the tragedy of the horizon. That in our current or historic financial reporting regime, we've been very focused on today's risks, maybe looking ahead a year or so, and very keen to look backwards. But we are aware of these known risks, climate, other sustainability risks in the future, and we've been unable within our systems and processes to communicate those risks to today's stakeholders, to today's investors, so that they can allocate capital based on those future known risks. And that, as Professor said, was creating an information asymmetry that for investors, integrated reporting closes down. The ISSB standards are a way of formalizing that process and scaling that to create a global baseline for the concepts and principles that we've been working on through integrated reporting for the last 12 or 14 years. Because paragraph 2 of S1 talks about the inextricable link between the needs and expectations of investors and the needs and expectations of other stakeholders as well, as they live in that one common ecosystem. And so it's very clear that integrated reporting has relevance and value to investors today. It drives better decisions in our capital markets. It provides broader and more complete set of information. It complements the financial statements. You know, when you think about IFRS information, never forget that what we're talking about is the quality of the general purpose financial reporting. So the ISSB disclosures are meant to complement the information that your company will be providing using IFRS accounting standards or local accounting standards in some cases around the world. It enables direct communication by the board and top management of your company with institutional investors. And you might say, well, so much of investment today, isn't it passive investment? Isn't it index funds? But we've been engaging with BlackRock, the biggest index fund investor in the world. And what they say is, yes, a lot of our capital is tied up in index funds, but we vote on those shares and we engage with the company boards on the basis of the shares that we hold in passive strategies as well. So even investment that is in passive strategies, as you might call it, in index funds, it still has relevance how you report to your investors, because those institutional investors will be voting on those shares and will be engaging with the boards and top managements of those companies. I would also say that by thinking about integrated reporting as being useful to investors, what you're also thinking about is action. You know, an investor has the ability to invest or divest based on the information the company receives. Don't you as a company want to get your best narrative, your best story of how you're creating value over the short, medium, and long term to the group of people who have such power over the financial stability of your company, whether they invest or divest in your business? That is what integrated reporting allows you to do. Take back control of the narrative, of the story of your business for investors. And investors can move capital to the most efficient and productive parts of the market. And so if you're running a really good business, you want to get on the front foot and communicate to investors so that you can benefit from that. And integrated reporting, it provides that framework, those set of concepts and principles that enable you to do that, complemented, we believe, by the IFRS accounting standards and IFRS now sustainability disclosure standards, S1 and S2. And follow the money. Just think about all the commitments that our governments around the world have signed up to, whether that is climate change commitments, the Sustainable Development Goals, Paris commitments, or whatever it might be. And don't we all want a better society? We all want to think about and leave a better and more sustainable world to our children. Of course we do. But who's going to fund that transition? Well, there's $127 trillion in our capital markets globally, 127 trillion. And guess what? Our governments around the world collectively have $117 trillion of debt. So it isn't going to be the governments financing this transition because they are saddled with debt. It will be our capital markets. And if we can get information to capital markets that is clear and concise and objective, you have an opportunity for investors to allocate capital to more sustainable and more productive business models to fund the infrastructure, the energy transition, the renewables that are needed in order to power the commitments that we all wish to see to leave a better future behind when we step down from our roles in business and the economy. So capital markets have a huge contribution to play, and integrated reporting has a huge contribution in informing those capital markets. My final point is, on this point, that it takes the politics out of ESG and sustainability. Haven't you noticed how sustainability has become a geopolitical football in recent months and years? Integrated reporting positions sustainability as something that is relevant to the strategy, the business model, the value creation process of your business. We're not trying here through integrated reporting to play a political game. We're trying to inform capital markets about the key risks and opportunities that are relevant today and in the future that are related to those issues that we know will determine the future value of your businesses, and have engagement with your investors and prospective investors on that basis. Now, we are seeing growth in integrated reporting around the world, continued growth in integrated reporting. Since the integrated reporting resources became part of the IFRS Foundation 3 years ago, nearly 20% increase in the use of the integrated reporting framework. Now, you'll be interested to hear that a lot of that growth has come from Southeast Asia and from Africa and from Latin America, actually. So it really is taking on a renewed interest and focus in these markets. And what we have found is that the companies are using the integrated report to communicate to domestic and international investors about how they're creating value and to build that relationship of trust so that they can have a long-term investor base rather than, as I was talking about the different types of investor earlier, having those short-term traders as well. Now, what the practice is telling us in terms of this investor-focused communication, well, we've got a variety of practices around the world, and corporate reporting, as you'll be aware, is going through a transition. And I think some of the mega trends that we're seeing in the world are that there's still a risk of fragmentation in reporting, still a risk of silo reporting, still a risk of reporting within companies being seen as a compliance-only exercise. And what the integrated reporting framework and the ISSB standards try to do is put governance at the heart of reporting. So we really do understand how corporate governance can drive better quality reporting and vice versa. There's an inextricable link between the two. So we're seeing a variety of practices. Some companies now, adopting the ISSB standards on a voluntary basis and using that information in an integrated report. Some are choosing not to. And we are very comfortable with companies choosing to use, first and foremost, the S1 and S2 standards first and get those principles and concepts right, thinking about the investor first, thinking about providing information that is unobscured by other information or information for other users, and making sure that it's there, clearly identifiable for the investor audience. And thirdly, thinking about connected information. How are you connecting your sustainability risks and opportunities with your financial statements? So thinking about those issues, and then determine where to locate that information. Should it be in an integrated report? Should it be in your a separate sustainability report? That is for you to decide as companies. But what we do is provide guidance for you. If you choose to use the integrated report, we can provide guidance. We've got resources available to support the implementation of sustainability disclosures within an integrated report so that you absolutely meet those requirements and also produce a really high quality integrated report that is of value to investors. Because what we want to avoid is some of the practice that we've seen of companies using the integrated report almost as a depository for all information on sustainability and financial information. So using lots of different standards, different materiality definitions, and putting all of that information and ending up with a 500, 600, even 800 page reports that are not clearly defined in terms of who the user of the information is. And it is very difficult, therefore, to really make decisions based on the information being produced by companies that are producing those sorts of reports. We want to go back to basics, back to those first principles. How do you think about your materiality assessment in terms of what could reasonably be expected to influence an investor's decision on the cost of capital, on future cash flows, on your business model, and then communicate that in a way that is unobscured by other information. And so we have determined a new set of messaging that will really help preparers to orient themselves to adopt the integrated reporting framework and S1 and S2 in a way that is really valuable, in a way that avoids that compliance regime, that adopts the principles of integrated thinking, because we think that that is really important. And also, and I'll tell you why integrated thinking is really important. It's really important because if you break down silos within your business, break down all of those institutional or functional silos within your business, you're much better able to identify the key risks and opportunities that are there within your business. And that ensures that your corporate reporting, your sustainability reporting, becomes part of the core governance communication of your organization. And so in conclusion, Nadia, what I would say is this, that I think integrated reporting is needed by investors more than ever before. And this is going to form the basis of our engagement with you in the months and years ahead. And I'll say to MIA, to the steering committee, to Pauline, and to the many hundreds of people on the call today, and I say this every time, and I mean it, and it does result in continued engagement, that if groups of our participants or individual participants want to know more, please do get in touch with MIA, with Simon, Nadia, the team. We can have a call, we can have a meeting and a discussion about this, in more detail, if that is of value to you. Because we are facing these complexities in geopolitics, in governance as well. We do need to have trusted information flowing through to our capital markets to attract investment from domestic investors and from international investors as well. We need to understand the risks and opportunities that are here today, that exist today, but also that are known risks in the future. And we need systems and processes, tools like the integrated reporting framework that help companies to orient themselves around these risks and opportunities. And we think integrated reporting in a way goes further than simply identifying those risks and opportunities. It really does invite companies to assess the interrelationship between the different resources and relationships and how that affects the potential future cash flows and cost of capital. And that is the value of true integration. So finally, what I would do is just invite you to have this mutual relationship with us where we continue to engage. A sustainable company is a more valuable company, and that will be of keen interest to investors. The challenge is, how do we put in place those systems and processes that enable you as preparers as efficiently and as cost effectively as possible to access the information, the data, the quality of data, connect that to your strategy and your business model, provide it in a way that it's really clearly identifiable and concisely, and in a way that enables your top management and governance to engage meaningfully with investors and potential investors, so that you have that lower cost of capital and higher share price performance that Professor talked about in her presentation. We believe we have the tools to help you and support you on that journey towards better corporate reporting. We recognize that this is a change management process. We're here to help and support that. But we also know that integrated reporting and that process of integrated reporting reduces the risk by investors of investing in your company. It provides them with more insight, more confidence that your company is managing its risks and opportunities. And it demonstrates how your company is using all the resources and relationships optimally. Finally, it puts at the heart of reporting the role of MIA's membership, the CFO, the assurance practitioner, the finance team within companies, because it means that you're thinking not just about those transactions that go into the financial statement reporting, but you are the trusted partner of the CEO of the business, thinking about those future risks and opportunities and how that impacts your business model. And sustainability disclosure, I think, is the biggest opportunity for professionals in accounting and in finance that we've seen in a generation, because it reorients the profession, it provides real value to business and to our capital markets. And I think it is a long-term investment that will yield real results. And I'm delighted that MIA for years has been on this journey and has invested in it. I thank you for that. And Professor, thank you again for your profoundly important research and presentation today. Thank you. Back to you, Nadia.